And welcome into Market Talk for this Tuesday, January 4th. Great to have you with us. Happy New Year once again. I'm your host, Jesse Allen, and thank you for making us part of your day. Find us online, markettalkag.com. That's our home where you can find all of our streaming sources, our social media links, and much more. It's all online, markettalkag.com. Well, we had plenty of fireworks in the grain trade today. Soybeans and corn took off like a rocket, bean oil as well, and moved sharply higher. Wheat was firm to moderately higher today as well. Really not a whole lot of red on the ag screen except for in the cattle markets. Let's talk about all of it. Let's bring in and say Happy New Year to Bill Biedermann with agmarket.net. Bill, great to have you on for this Tuesday, sir. How are you?
I'm doing really good, Jesse. Appreciate you having me on.
Bill, let's dive right into these markets. A lot of impressive strength here today. Soybeans were higher on Monday, and then we kind of seemingly continued that here today. We got some weather worries in South America that seem to be one of the bigger drivers of our move higher today. But corn moved right along with soybeans here on the day Tuesday, and wheat was firm. What's your initial thoughts in these grain markets here after Tuesday's close?
Pretty impressed with the move, Jesse. The attitude completely turned around from yesterday when the market was a little bit more cautious with some rain, scattered rains in the forecast down in South America. But then overnight, we saw Dr. Cordier lower his crop production numbers. That put a kind of solidified the idea that the crop really is bad down there. In fact, his total Brazil and Argentine bean number is below year ago numbers now. So that's pretty significant. That really could change the dynamic because right now we don't with a good crop down there, we don't really need more acres of US soybeans. But if you lower that crop, then we could absorb those acres and it wouldn't be such a negative potential story for the 2022 bean crop. So we had good strength across the board, 35 cents on the old crop today, 17 cents higher on new crop. Real impressive day.
Real impressive day, and the soybean market charging higher here, closing in on $14 on some of these contracts. I mean, that's something here a couple weeks ago we didn't think we were going to see, Bill.
Yeah, that's right. And last week we failed at that 1384 level, and we closed that day around 1368. So that roughly 1370 area, and then the high of last week 1384 and a half. Those were really key areas to get through. And not only did we trade through it, but we closed above it. That's really significant on the chart. So I think, now we've got really solid support at 1340. I know it sounds like it's a long ways down there. I mean, that's a half a dollar lower than where we're trading, but we were just there 2 days ago. So in these markets, that's not too far away.
Over on corn, I know some folks were a little concerned. Technically, yesterday we broke through some of that support around 590, 593, but totally different story today. I mean, pushing well above $6 in those front month contracts here today, following along with soybeans. What's your thoughts on this corn market after Tuesday?
Well, the corn fundamentals have always been better than the bean fundamentals. So I think there's a better support base under the corn. When you went down towards that 580 area, you got down to 585 yesterday. There's good end user buying there, not only just in flat price, but in spreads. And there's just a lack of farmers selling. Farmers just aren't going to sell when the market sells off. And so that 580 area is going to be, I think, solid support between now and spring when we know what acres are. Resistance is probably going to be, we're thinking 620-ish on the old crop. That's probably a high enough price to get enough grain to keep hitting the pipeline. Plus, there's a lot of grain moving right now just on deferred contract delivery. So we're seeing an adequate pipeline supply right now. Barge freight is still very expensive as there's a big push to get inventory moved. So, I mean, right now, I think the pipeline is well supplied. That'll stop the market from getting too high. And then, like I say, there's a lack of supply moving from the farm on any kind of sell-off. Now, the caveat to all of this, of course, is going to be South American weather. We're still predicting a bigger crop than last year down in South America because the biggest corn crop has yet to be planted. I mean, they got to get the beans out before they can get the corn in on that safrinha crop. And it's wet down there. They're not even able to get the beans out.
Yeah, a lot of things to watch with that South American weather picture here moving forward. I heard some chatter, funds adding to longs in the quarter bean market here today. What did you hear on that end? And maybe tie that in with just the thoughts of, a new month, a new year, new money flow into these markets, Bill.
Right. So I looked up about a month ago in the corn. I think they've added about 30 or 40,000 contracts. In the beans, they've added about 60 or 70,000 contracts of long positions in the last month. So, you can't, like yesterday's, the open interest was down and the market was down. So that indicated people were liquidating positions. You can't get too excited about a 1 day trend when you're following open interest. This open interest is going up. The funds are building a long position. The trend is up. The bigger picture is the trend is up. It's got good momentum to it. We're not overbought. The money, if you look at money capacity versus money invested, we're not at capacity. This market, if it turned bullish and kept feeding the bull, there's plenty of money to keep driving this thing for a while. I know I don't want to talk too bullish in front of the farmer because he'll just, never sell, and then he'll wait for 5 years to get it back up to that high price. So we want to be selling the rally, just don't want to do it today.
Well, Bill, as well, I want to talk the wheat market here real quick. Winter wheat was our leader at the open today, and we got some of those really rough rating updates for the crop throughout the plains states. I mean, 20, 25 percentage point drops in Kansas, Oklahoma, Nebraska on the good to excellent side. But wheat kind of relinquished the lead here today. Still ended up firm, though, especially Chicago, Kansas City winter wheat up double digits today. What's your thoughts with the wheat markets here this week?
The last 5 trading days, the wheat has been the leader on the negative side. And it even continued today by only being up 10 cents when corn was up 18 to 20. Wheat's been the dog. And I think it goes back to what we were just talking about. The funds are building a long position in corn and soybeans. They're selling the wheat. They're net short, the trading funds, not the long fund only. But that kind of tells you that funds have usually got to be short something to be long something, and I think they're just using the wheat market as that protection. What I think could happen, Jesse, is this thing, if anybody watched our video last night, Jim McCormick was showing us the drought compared to back in 11-12, and this drought is way worse. And I think if that starts to become the perception of reality, and these funds decide to come out of some of these spreads, this wheat market is at very solid support. I hope it holds here for the chart's sake, because from a fundamental standpoint, it should hold. And, here's another thing. How many hundreds of thousands of acres burnt up in Kansas in the last month? I mean, literally burnt up with a fire, not just, in drought. That is so unbelievable that it never even hit national news. I mean, the reality is there's problems out there. And if this drought breathes, inhales and breathes like typical droughts do, it's better positioned to hit the Midwest this summer than it was in 2011 at this time of year going into 2012. So we've got a long, long season ahead of us, and we're at support on wheat, so we're hoping it holds here.
Yeah, a lot of things to consider with wheat, and of course, thoughts and prayers with all those farmers and ranchers who are dealing with those fires and everything out in the plain states. Be interesting to watch here the next couple of weeks ahead for sure. Bill, I want to talk over in the livestock sector. Cattle was the one spot today where we saw a lot of pressure. And I would think most of that probably attributed to the higher grain prices today, especially on the feeder cattle side. But what's your thoughts with cattle here as we wrap up Tuesday's trade?
We've been hearing that premium cuts are really moving well. And so we had a pretty good box movement yesterday. I personally think, and the guys that do the livestock in our company are pretty in tune with what's happening on the availability of product. And it's cleaning up, even though there was a lot of it around. We're seeing some light at the end of this tunnel, and we think that this market will find its feet pretty quick here. And I think you're right. I think most of today's negativeness was based off the higher grain prices and, selling some of that. There's also a new variant of COVID that apparently, it hasn't been confirmed by the CDC, that was identified in South Africa and France. I don't know. Nobody knows how significant it is or anything like that. But I think that threw some fear into the markets too late in the afternoon.
I wonder as well. I know we had the Biden administration come out yesterday with their action plan for the meat packing industry and livestock. And, one has to wonder how much that could affect our market trade moving forward. It didn't seem like yesterday or today it was a big weight on cattle or hogs, Bill.
I don't think it will be. I don't think that's going to affect the nearby situation. You know what it would do in the long run, just like build out of any industry, if the government were to subsidize small packing houses to get going and get started, like back in the day when we were young kids, I think that would be long-term supportive, but I don't think it has any impact on the market today.
Bill, as we wrap up here, I know we covered quite a bit in a short amount of time. Any thoughts in the hog market today? That looked pretty quiet, and or just any other thoughts in general here today, Bill?
Well, we have a new dairy division, and they've been pretty bullish and pretty right this milk market. So I guess milk was limit up. I don't personally trade it, but for those of you who are interested in that, give us a call on that one. I think there's a lot of opportunities right there, in some of these outside markets like the milk. I think there's great opportunities in this year in following the Dow Jones. We do trade Dow Jones futures, which is an index. You don't have to pick a stock. Same with the bonds. I mean, like for some of our bigger corporations and farmers for that matter that borrow a lot of money, selling the bond market on strength is a good idea because higher interest rates makes that market go down. We know we're going to have higher interest rates, especially if this COVID thing starts to resolve itself, which these new variants, we're getting immunity, but we're not getting real sick. That's really bullish the economy in the front end, but it's really a big story for raising interest rates and good justification to do that. So there's a lot of balls on the table. One of those is inflation. One of those is higher interest rates. There's a lot of things going on, and a guy really needs to watch what opportunities are there because there's a lot of protection that needs to be taken, whether it's producing grain and locking in a profit or locking in your costs and costs of money.
Definitely, Bill. Couldn't echo that sentiment anymore. I know as well, if producers need a little advice, you guys have a great team there, agmarket.net. You guys have the app as well. A lot of great things for people to check out and a lot of ways to get a hold of you guys, isn't there?
Yeah, and in fact, we're going to have two meetings that I'd like to plug. One is in Kansas City and one is in Indianapolis here at the end of the month and beginning of February. So please give us a call or look us up online.
Agmarket.net for more information on those meetings as well. With that, Bill Biedermann, appreciate the time. Thanks for joining us today on Market Talk. Have a great week.
Thank you, Jesse.
Bill Biedermann with agmarket.net. That's going to do it for Market Talk on this Tuesday, January 4th. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.